What's your sense? Are we headed higher? Are we headed lower?
I think within the trading range that we're thinking of, we're probably going to be head lower actually. Well, I mean, you know, our trading range originally was 8,500 on Nifty to 9,000, and now we reduced that to 8,200 to 8,500. But you know, global Qs are not looking that good, Nikunj. I mean, bond yields in Europe are rising. Greece is still out there. We've got the elections in the UK tomorrow, which I know is not a big global event, but you know, if it's a hung parliament there, it could have impacts on the currency, and that will have an impact on you know, Europe as well. So all of these things are still to play out. So, and you know, if you think about, you know, 1 year on, you know, the market's up what, 10% since the government took over. Nothing much changed on the ground, and if anything, oil prices edging higher. So doesn't bode well in the very short term, I'm afraid. I think it's going to be another quarter. I think you're going to get the huge volatility that you saw last month is going to be for the next 3 months at least, and it's pretty painful last month for majority of people.
The earnings till now, Andrew, haven't haven't come out really well, save for maybe a few companies. If you indeed believe that the range is downwards and there is huge volatility expected, your precise words, what happens to the underperformers? Do you think there is substantial more downside to the tune of 10, 15, 20% for some of the underperformers? By underperformers, I mean companies which haven't delivered on earnings.
You know, a lot of them have, you know, been seen falls before the, you know, before the earnings came out. So a lot of it has been kind of already priced in. I think what I'm thinking is that, you know, you saw it in IT, you know, in the results season. You know, that decade of growth is over for them. But, you know, with oil prices rising, this can't be good for the consumer sector. You know, they've benefited from low raw material prices, and this is going to be an extra squeeze for them going forward. So again, double-digit sales, double-digit, single-digit kind of profit growth for the consumer sector, all trading on earnings, P's of 40 times plus, means that you could see a big swing downwards for that sector going forward. So, you know, these are the kind of things which are going to bring, you know, a lot more volatility to the markets, and you know, there's no place to hide. Last month, the defensive sectors, it wasn't a place to hide, and I think that's going to be the pain that the market's going to feel for the next quarter.
So, Andrew, you're saying it's going to be across the board volatility. There will be no sector which is going to be resilient or withstand the moves either side.
Yeah, I mean, I'm not saying that the market's going to take a one-way fall. So
yeah,
you will see certain sectors, you know, move higher. Obviously, if the commodity pack's moving higher, then obviously, you know, you'll see the likes of Hindalco and Tata Steel start to move higher. Obviously, Care would move higher on the higher oil price. So there will be pockets. I'm still expecting a base rate cut from the RBI, so I think the banking sector. So, you know, overall it's going to be a volatile kind of, you know, month. We could see the market head down and then head up towards the end of the month as a bit more optimism comes back. But it's going to be a difficult place to make money, that's for sure.
And how long is this difficult patch going to last, Andrew? Would you say this is just a 3-month, 6-month phenomena, or do you think this volatility is going to mar the markets for the entire year?
I certainly think it's going to last till September. If I look at the global kind of perspective, I think for India, unless we start to see the government, you know, really throw some money into infrastructure to get that multiplier effect, I think, you know, we're gonna have to wait till that happens to get a bit more optimism that earnings will start to pick up, and of course, you know, sentiment's going to be, you know, also affected positively or negatively by the monsoons. It's not a great play in that, but I think it's just a sentiment wise. You know, we could that could also bother us during the summer months. So these are kind of things, you know, the headwinds that are out there, which we've been ignoring for some time because global liquidity has been strong. But when you see the bond yields in Spain go up so quickly, you know, there's some problems out there. So we've always said that India alone can trade around 8,500 is probably where we see the kind of Indian market steadying, but global factors could obviously take us below, which is what we're seeing. And of course, China's emerged in the past quarter or so as a destination for a lot of foreign funds who are hugely underweight China, and that's what you've been seeing. The shift of incremental flows have been going to China, and obviously the mad issue in India has kind of needled FIIs. Not that they don't like India anymore, but I think it's just the way it's been handled has been very poor, and that's really affected sentiment as well.
Now, my question to you, Andrew, is that a lot of people talk about how the rural demand or the domestic demand might not be that great. We've seen Maruti defy that in their monthly sales numbers. As we were talking about the commentary from Adi Godrej or the results from Dabur, even if they are for the quarter gone by, have not been too bad, and domestic demand has been strong there. What is your own sense, your own channel checks suggesting about rural demand and the companies exposed there?
So on the consumer side, we believe, or what we're hearing, is that sales are falling quite quickly, and as I said before, that if you don't have the higher oil prices, obviously going to affect your raw material costs as well. So the consumer sector is going to get derated, in my view, over the next 6 to 9 months. Because there's going to be better growth stories. As you know, in the auto sector, we played the auto components instead of really the kind of auto players, because that's where you're going to get more operational gearing, although Maruti has benefited again from the currency. So, when we look at some of these companies, it's a currency factor or it's a commodity factor, which has helped them in their top and bottom line. But the sales growth from what we're picking up from consumer companies is actually it's falling quite quickly now. So that's why I don't want to be in that sector.
It's Bharti, and that's really the big one when it comes to a stock or when it comes to a large cap stock which is exhibiting momentum. Andrew, is there merit in buying telecom stocks? The street is divided. Those who believe in the telecom story are of the view that guys buy into telecom because spectrum, which is the raw material, that has been taken care of. The non-believers would insist that telecom has been a low margin business and it will remain a low margin business.
Yeah, no, it's going to remain a very competitive business. But what we've been doing, Nikunj, is slightly aside from that, is for the first time in a number of years, we've been actually buying Reliance Industries, that is, on the basis that its capex cycle is coming to an end in terms of retail and telecom, and come September onwards, we'll start to see a lot more interesting kind of views from what's happening in both of those businesses, and I think that's going to be the kicker for the share price going forward. So if you're banking on telecom to the sector, then obviously Reliance is going to be a beneficiary. So I'm playing indirectly through Reliance, and also because of retail and what we've seen in retail, there's obviously a big change going on there. So these are kind of factors, apart from its core business obviously of Reliance, which is performing okay, these could be the two catalysts which move the share price after such a long time.
What else is looking interesting?
I think I just mentioned, after a long time, Reliance is back on our radar for the reasons I mentioned, and obviously that's a big heavyweight stock. So that could at least help the index hold its levels or give that extra momentum. So that's a new call. That's a new and big call actually. I don't have any bigger calls in saying that about Reliance, to be honest.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.